You're
Well,
you good?
we're good. Yes.
All right.
Okay. Welcome. These sessions will be recorded. I'm pleased you could join us for the Business Education and Resilience webinars with 1917. My name is Pauline Marquardt. I am the Executive Director of the Greater Bowie Chamber of Commerce, which is made up of members with common interests and concerns related to the business environment in the Bowie area. It is the primary professional trade organization in the Greater Bowie area dedicated to the protection, enhancement, and success of business in the Bowie community. The Bowie COVID-19 Business Recovery Assistance Program delivers online technical assistance to help Bowie businesses accelerate their post-pandemic economic recovery. This program is a collaboration between the Greater Bowie Chamber of Commerce and the Bowie Business Innovation Center, and funded by the City of Bowie. During this webinar, it is best to be comfortable with your video on. Remember to mute yourself. Please ask questions through the chat unless otherwise directed. Welcome, William Eric Lindsay, Senior Business Counselor of 1917. Good to have you back.
Hi, Pauline. How are you?
Well, thank you.
Good. Before I turn it over to Manny, who's going to get into some really cool QuickBooks stuff tonight, I just wanted to do a quick introduction. As Pauline said, this is the Business Education and Resiliency webinar series. My name is William Eric Lindsay. I'm the owner of 1917. I'm a business coach and senior business consultant, and we work with small to medium-sized businesses and looking at their internal operations and improving them and getting them fit for growth. So first, I always want to start off with gratitude. Thank you, Pauline, and thank you to the Chamber for selecting myself and my team for creating these webinars for the small business community here in the Greater Bowie Chamber of Commerce area, or the Greater Bowie area. And I just want to thank Manny for actually accepting being, part of one of my team members to be doing this. So yeah, having him here and having him on the team, knowing him for a few years is a really great asset to have. So we definitely look forward to this presentation this evening. So again, just a little bit of overview. This is a 2-section, 12-part webinar series. So the first section started in January. We ended, I think, in March, or actually April 15th. And then we took a break. And then we started the second section with another 12-part webinar series. And for a total of 25 webinars. So right now we're in section 2, webinar number 4. And what we did is we took a programmatic approach to addressing business development. We did one webinar sort of builds upon each other. So, the first webinar was about business goals. The second webinar was about, we got into the tools of business planning. We talked about a tool that you can use for business planning and tracking your goals and tracking, even doing some basic cash flow financials within the business planning tool. And then the third webinar, we went into some financial literacy again, talked a little bit about the tools of financial literacy in preparation for Manny's presentation tonight. So obviously we talked about goal setting all the way to operational management of all the elements of your business. And then we're also going to get an update from our federal government colleague, talk about the PPP and the EIDL. That is a lot of information that's been coming out and changing since the last webinar, and probably since 8 o'clock this morning. Things are probably changing with the PPP and the EIDL. And with the grand finale of July 15th, we're going to have a picture of business competition. We were just talking about earlier with Pauline. We're going to have a sign up for that probably in about the next 3 to 4 weeks. And we're probably going to do a separate 30-minute webinar on that, just to kind of have a training, I would say, maybe to show people, well, this is how we're going to sort of grade and rate your webinar based on these elements. So we're probably going to add that. Pauline and I were talking about that earlier. Again, we'll select the first place winner, but we're also going to select the second and third place winner so that we have more people involved and more prizes to go around. So my pitch for you tonight is just to really sign up in return for all the webinars. I have a gut feeling instinct that you guys may come back next week for the second half of Manny's webinar, which is going to be just as good as the one that you'll see tonight. So we look forward to that. So with that, I'll end it here, and I will turn it over to Manny Cosme, the owner and chief accountant, chief owner, chief executive officer, chief QuickBooks trainer,
Just call me Chief.
chief, just call him chief of CFO services located in our area. So Manny, take it away.
Thank you. Let me grab my screen here. Hang on a sec. All right. And I'm going to apologize in advance because my dog is snoring in the background. So if you hear that, if you hear something weird, that is my dog who loves to sleep about 18 hours a day and loves to snore. So she may try running in her sleep. I don't know. We'll see. But anyway, welcome everyone. So glad you're here. I know this has been an entire series. I did one or two of the presentations earlier in the year, which feels like forever ago now. But we're going to get a little bit more into the weeds of actually QuickBooks. So this is going to be more of a QuickBooks tutorial. When I do these tutorials, I kind of warn everyone in advance that it's gonna be demo, right? I'm gonna show the screens and show you how to do things in QuickBooks. So you can sit back, relax, watch it, but really you probably want to keep a copy of this and refer back to it as you actually work in QuickBooks yourself so that you can refer back and understand what you're doing here, because this is a little bit more demo focused. Next week, I'm going to be talking about reports, which is going to be more of the strategy, theoretical type stuff. So that one, you definitely want to make sure that you attend so that all this great information that you're collecting, you can ultimately use to help manage your business. All right. So that being said, this is my QuickBooks Crash Course, which is and I go over the top 3 things that you need to understand to be able to use QuickBooks immediately. In particular, here's what we're going to learn today. We're going to learn about bills and expenses, creating bills, paying bills, etc., invoices and receipts, creating invoices, receiving payments, reconciliations, and all of that fun stuff. So that's what we're going to dive into today. So as Eric said, my name is Manny Cosme. I'm the founder and CEO of CFO Services Group. We are an accounting firm that focuses on management accounting for small businesses and nonprofits. So what is a management accountant? A management accountant is not a tax accountant. Tax accountants focus on taxes. Management accountants focus on how you manage your money in your business. So that comes in 2 major areas. It's bookkeeping, right? So entering all the transactions, what we're going to do here today using QuickBooks to capture data and information, make sure you get your invoices out and whatnot. And then it's CFO strategy. So then taking all this great information and helping you think through how you're going to grow your business. So, you have a goal that you want to achieve. How are you going to achieve that goal? What do your sales look like? What does your pricing look like? All of that fun stuff. So that's what I do day in and day out. That's what my firm does day in and day out. So you're in good hands here. I've been doing this for well over 20 years. So ask me whatever questions you have. I have no one has yet stumped me. So there we go. But we're going to get into the bookkeeping side today of our house for sure. So we're going to be going over QuickBooks Online, of course. So QuickBooks has an online version and a desktop version. We're going to be going over the online version because it really is kind of the version that is being pushed these days. So if you happen to have QuickBooks Desktop or you're curious about that, Intuit has already said that they are going to be discontinuing the desktop. They are moving everything to the online version. And I will tell you, after working in QuickBooks for over 20 years now, QuickBooks Online is far better now than the desktop. It's a really great program. So this crash course is catered to QuickBooks Online, okay? Now, because this is a crash course, obviously we can only cover a few things. So what I like to tell you is what we are going to cover and then what we're not going to cover today. So if you're curious about any of these other things that are here on your screen, then feel free to, I'll do some Q&A towards the end here. So if you do have questions around some of these areas, feel free to ask, and then we can get into some of that maybe towards the end here. But for purposes of the crash course, I really want to cover just the top 3 things that you do need to understand how to do right away in QuickBooks here. That being said, I also have a bunch of e-courses I've created over the years that do deep dive into all the areas of QuickBooks. So if you want some supplemental information, if you want some education around how to really use QuickBooks and all the things that it does, and it does a lot, let me tell you, it's a really fantastic program. Very, very helpful to help you run your business. I do have some e-courses that are available, and we can chat about that offline if you're interested in that. All right, now, as I said, I'm going to be doing some demo of QuickBooks. So again, you can sit back, relax, watch this. However, because we're going to get our hands dirty here, it's helpful if you get your hands dirty as well. So if you have a QuickBooks Online file, I encourage you to open it up right now and follow along with me. If you don't have a QuickBooks Online file, then that URL right there on your screen is a test file that you can access. And the screenshots that I use here are actually taken off of that test file. So you can just pull it up and follow right along with me. And that will help you retain some of the things that I'm showing you. So definitely feel free to do that now. And I'm stalling here and talking so that you have time to pull that up. But that's what I'm doing. So feel free to pull it up and then follow along with me. And then we can go through all this together. All right. With that, let's jump into our first area, which is all about spending all the money that you're making, all that wonderful money that you're making. We're going to first talk about how you record the spending of it. So as a business owner, of course, you need to clearly see how you're spending your money so that you can be a good steward of your hard-earned money, right? And if you use vendors, keeping your key vendors happy by paying them on time is crucial so that your business keeps moving forward there. So let's spend some time talking about this. So before you can spend money, you need a vendor, which is someone that you're giving your money to. So a vendor can be a person, it can be a business, or it can be an organization to whom you pay money to. So in other words, you're buying something from them. So a vendor, classic example, can be something like a gas station, right? You purchase gas from a gas station, or the landlord that you pay rent to, right? So those are typical vendors. However, it can also be a supplier that you're purchasing inventory from. So if you have inventory in your business, right? But it can also be a bank that you borrowed money from and you're repaying the loan to, because in that case, you actually bought cash from them if you think about it. And so now you're paying them from that cash. So a bank can be a vendor to you. It can also be a government agency like the IRS, right? Or actually the US Treasury technically, because you're paying taxes over to the government. What is the government? What are you buying from the government? You're buying public goods and services. You're buying roads, clean water, fire department, right? All that stuff. So you're buying something from the government by way of a tax. So the government is a vendor to you. So these are all examples of what we consider vendors. Now, why is that important? It's important because an expenditure is always tied to a vendor. So when you use a bookkeeping system like QuickBooks, you're always required to identify the vendor to whom you are entering the expenditure for, okay? Right? Like I have to buy something from someone, all right? So it's always tied together. So this is, of course, important so that you can also track how you spend your money. And this is where we go into a little bit of the strategy side of the house. We want to know which of my vendors is getting paid the most money. Is that surprising to you? Maybe is someone getting paid automatically and you forgot to take them off an auto payment? You know, things like that become really important for you as you grow your business so that you can mold your strategy around that and really ultimately make sure that you're achieving your goals. So for this reason, we need to set up our vendors before we can enter our expenditures into our bookkeeping system. All right, so let me show you real quick how to do that. And by the way, just sneak preview for next week, some of the things I mentioned around vendors and the expenses and whatnot, those are some of the reports that we're going to be looking at next week when we get into that. All right, so sneak peek there. All right. To create a vendor in QuickBooks, we're going to first jump into QuickBooks. So real quick, this is what QuickBooks looks like when you get into there. Along the left-hand side, you're going to see your main menu there. And what QuickBooks does is it divides things up into what they call centers, which are sort of these areas of similar things that you do in QuickBooks. So as you can see here, this is the expense center. So everything that involves your expenses are going to be captured here. So your vendors, expenses, etc. We have sales, we have payroll, reports, etc. So there's all these different centers that they set up. So to create a vendor, we're going to start in our expense center. So we're going to click the expenses button on the left-hand side of the screen there, and that's going to bring us to our expense center, right? So once you get into your expense center, you're going to click on the vendors tab there at the top left. And then what we're going to do is click the new vendor button to bring up the vendor creation screen. So this is what it looks like to set up a vendor in QuickBooks. Now, notice right away all the information that QuickBooks can capture for your vendors. Okay, now, since this is a crash course, I'm not going to go through every single one of these fields here, but I just want you to take a notice at the information that it can capture. QuickBooks is really great because it can capture a lot of important information for you. In fact, it can serve in a lot of ways as a virtual file cabinet system for you, or even as a as almost like a CRM system, a database for you. So there's a lot of really great information that it can capture here. So definitely on your own, take advantage of poking around in here and seeing what information that you can capture. For our purposes, to create a vendor for purposes of the crash course, it's very, very simple. All you have to do, the one and only thing you have to do is enter the name of your vendor in that box right there, and then just save it. And just by doing that one thing, you will create a vendor in your system. Once we create a vendor in our system, now we can start capturing expenditures related to that vendor. Okay, so it's just that simple. So now that we have vendors and you start adding vendors, now we can start entering our expenditures. So there are philosophically two ways that you can expend money. So you can either buy something now, today, and pay for it later, which we call a bill, or you can buy something now and pay for it now, which we call an expense. Okay, so a bill is something that I'm going to pay later. An expense is something I'm going to pay now, immediately. So for example, if you work with an attorney, they're going to do some work for you and they're going to bill you, right? They're going to be doing work and they're going to be racking up hours for you. Well, they're not going to bill you every time, or they're not going to require payment from you every time they work an hour for you. What they're going to do is work the entire month, then send you a bill at the end of the month, which then you're going to have 30 days to pay. So that's a bill. Okay. Conversely, you go to the gas station, you have to stick your credit card in the machine before it will allow you to pump gas. That you have to pay immediately. So that's what we consider an expense. Okay. You buy a cup of coffee at Starbucks, you have to give them your card before they give you the coffee. That's an expense. So philosophically, two different things that are happening there. So I want you to kind of understand that those are the two ways that we expend money. We say that because there's two different ways and two different screens that we use to enter this stuff. So let's first talk about how to create a bill. So in QuickBooks, what you're going to do is click this plus new button on the top left. Now, this button here is how you create new transactions in QuickBooks. So you're going to become very familiar with this button, and you can see there's a bunch of things that pop up in that menu there of things that you can do in QuickBooks. Obviously, we're not going to go through all of them today. What we're going to do first is find the bill option and click on that, and that's how we're going to create a new bill. All right. So this is what the bill creation screen looks like. So let's take a few minutes to kind of explore what's on this screen. So the first thing we want to do is select a vendor. Again, we have to, obviously we're buying something from someone, so we're going to have to select the vendor. So if we don't have the vendor in our system yet, you want to add the vendor first and then come back here so that you can select the vendor. Okay. But again, you have to have the vendor in your system because you got to buy something from someone. All right. So once you select the vendor, then some information is going to automatically pre-fill on the screen here, depending on if you filled out all those other fields when you created the vendor, which is optional. You do or don't have to do that. Okay, the next thing you want to do is enter the date of the bill. So what day are they billing you? And then perhaps even more importantly, what day is the bill due? This is important because this is how QuickBooks starts tracking and alerting you to if you have past due bills. So you want to take a second and just input, when is this bill due? Is it 30 days from now, 15 days from now, whatever, so that QuickBooks can start doing what it does best, which is remind you, hey, you got a bill you got to pay here. Okay. So we'll do that. Then we're going to jump down to this next section here, which says category details and item details. So real quick, I get this question a lot because people are confused by this. So if you've ever used QuickBooks, this may be familiar to you. Let me tell you what item details are first. We're not going to go into that because item details is if you are purchasing, if you buy inventory and resell it, or if you buy like raw materials and convert it into something and whatnot. That's where you're going to use the item details. What that will do is it will allow QuickBooks to start tracking inventory for you. That is a very powerful feature of QuickBooks. I have an entire presentation, an hour-long presentation on how QuickBooks does that. So it's a very, very powerful, important feature if you have inventory in your business. However, for purposes of the crash course, I don't have time to get into all of that immediately. So if that's of interest to you, definitely reach back around and I can chat with you about that. All your other expenses go into the other one there, which is the one under category details. That's where all your other sort of general expenses will be. And if you're a service-based business or a business that doesn't use inventory, all of your bills are going to go into that category detail section. All right, so that's real quick what the difference is there. So we're just going to focus on that first one there, which is your category details, because everyone at least is going to be using that. Okay, so the first question that QuickBooks then wants to know is, well, what account is this expenditure? What account does it belong to? Okay, and they call it category. So in other words, what type of expense is this? Is this an accounting fee? Is this a legal fee? Is it, a telephone expense? What is it? Okay. So what we're going to do is click the drop down arrow, and that's going to bring up what we call your chart of accounts. So your chart of accounts is just a fancy word for a listing of all the ways that you earn money, spend money, things that you have, things that you owe, and things that you own. Okay, that's all it is. It's just a giant list of basically how all the money flows in and out of your business. So setting up a chart of accounts, again, is a whole other thing that we can get into, and I can spend an hour talking about how to set up a chart of accounts. I'm not going to go into all that today. If you're curious to learn more about that, feel free to circle back around. But the nice thing is that if you're using QuickBooks, they will set up a default chart of accounts for you, which most businesses can use anyways. So what you want to do is just click that down arrow and find the category that you feel most represents what this bill is, okay? And don't be afraid to make a mistake. You can always go back and fix it later if you want. But you want to find that and then select that account here. And this is how we're going to start capturing this important information in your system. The next box is just going to ask you for a brief description. So what is this? What did you buy from this person, basically? Okay, so you're going to put that in there. And then it's going to ask you, well, then how much did they charge you for this thing? Okay. All right. And I'm sorry, I skipped a box here. Then notice that you can actually put multiple rows in this section here. So this is important because if someone's billing you for more than one thing in one invoice, which is becoming popular as people are sort of combining multiple services together, you can actually line by line put in as many lines as you want to capture that bill and get really detailed on what exactly they're billing you on. So in this example, let's say this person does bookkeeping and is an attorney. I don't know how realistic that is, but let's just say that's the case. They can bill you for multiple services under one bill, and then you can delineate that in your system, which can be very helpful to start getting more detailed records in how your finances are working through your business, which again, when we get to reporting, is going to be very helpful to you. Okay. Now, when you're finished entering the bill, you just want to double check, make sure that, hey, the balance of the bill matches, what I got on paper, matches what's in QuickBooks here, and then just click and save and close, and then you've now recorded a bill in your system. Okay, so that's how you record a bill in QuickBooks, and we can start tracking that. So now that you've entered the bill, unfortunately, you now have to pay the bill in real life, right? Okay, so now we're going to pay the bill. Now, It's important to know that QuickBooks will not pay the bill for you. You actually have to pay the bill in real life yourself. Okay, so you got to cut a check to the vendor or go online and pay it or whatever. All right. Once you pay the bill in real life, you then have to come back into QuickBooks and tell QuickBooks that you have now paid this bill. This is very important because if you don't, your what we call your payables list, your accounts payables list will be wrong. I mentioned this in the crash course because this becomes a big problem for businesses. When we first take on a client, I can't tell you how many times your payables list is completely off base. It shows that you owe a ton of money to people, and that's not really true. By doing that, it throws off all your financial reports. Your information is not accurate. Your cash balance isn't accurate. Your expenses aren't accurate, and it's just a giant mess. Okay, so this is one area that I really caution you to make sure that you're doing is make sure you go back and when you pay a bill, record the payment of the bill in QuickBooks so that it knows to close that out and it gives you accurate reporting here. All right. So let me show you how to pay a bill in QuickBooks. What we're going to do is, again, click that plus new button, which has become your best friend there. And this time we're going to select the pay bill option. And then the pay bill screen pops up. And you're going to see a list of all the bills that are currently outstanding. So these are all the bills that you have to pay. All right. So you're going to find the bill over here. You're going to find the vendor that you're going to pay. So there's a list of all of them there. Okay. And you're going to say, okay, I'm going to pay this one vendor here. This is going to be the amount, the open balance that you have with that vendor. So maybe if you prepaid some of the bill ahead of time, maybe you made a deposit or whatever, it's going to show the most current balance that's due on that bill. So you want to pay attention to that. And then you're going to record the amount that you're going to pay on the bill. It could be the total amount of the bill, or maybe you're just making a partial payment on the bill. Whatever that amount is, you want to make sure that you record, this is how much I'm going to pay on that bill. Okay. Next, you're going to tell QuickBooks which bank account is that money going to come out of. So you're paying your bill. If you have multiple bank accounts or even credit card accounts, what account are you using to pay this bill? This is how QuickBooks starts helping to track the cash that you have or the credit card balance that you have. So whichever one you're using, you want to select, it's coming out of my checking account, it's coming out of my American Express credit card account, whatever here. Okay. So select the account and then select the date that you're paying the bill so that QuickBooks can capture that information. You want to double check and make sure that the total of your payments matches what you've actually paid in real life. And then just click the save button. And by doing that, QuickBooks now closes out that bill and says, this bill is now paid. It removes it from your payables list. And now you have not only an accurate payables list, you have accurate financial statements, and you have an accurate bank balance because it knows to subtract that money from your bank account or whatever account you used. Okay, so that's how it kind of completes that picture there. And very, very important to make sure that you're keeping accurate records. So that's how you pay a bill. So let me circle back now and show you how to pay, how to record an expense. So if you remember, bills are all about paying later. An expense is something that you're paying immediately. So let me show you how to record that. So we're going to again go to our plus new button, and this time we're going to select expense instead. And then the expense screen is going to show up. And what you're going to notice if you pay attention is that this screen looks pretty much exactly like the bill payment screen. This is done on purpose. What QuickBooks has really tried to do is make sure that all the screens look very similar so you know intuitively where to go to enter information. So you're going to notice that all the screens tend to look the same as you move through QuickBooks. It's a very nice feature here, so you don't have to rethink everything. But the expense screen looks pretty much exactly the same as the bill screen. In fact, the only major difference here is this box right here, which asks you, well, where is this money coming from? Again, remember that when you have an expense, you're paying it immediately. So the money is immediately leaving your bank account or your credit card account. You're not saving it to pay later. So the one and only difference when entering expense is this right here, where it just asks you, where is the money coming out of? All right. Everything else you enter exactly the same, just that easy. And when you're done, just click the save button. And now you've recorded an expense in QuickBooks. All right, so let me pause and see if there's any questions that have arisen with entering your expenditures. Very, very important.
No questions yet, but does anyone have any questions in the interim? You can just always enter them in the chat room.
All right, well, I'll keep going then. All right. So next section, then let's talk about my favorite part of my business, which is getting paid. I don't know about you, but I love this part. So we're going to talk about getting paid. All right. So receiving money, invoicing and whatnot. So as a business owner, of course, you need to be able to charge your customers for the products and services that you sell to them, and then be able to capture and deposit this money into your bank account. You also need to make sure that, well, you are invoicing your customers and that your customers are paying you on time so that you don't run out of cash. Big problem that we run into all the time. It happens quite frequently. Forget to send an invoice, forget to follow up on collecting the invoice and whatnot. So QuickBooks really helps to make sure that you stay on top of that. So let's dive into this section and learn how to do this properly. So before you can sell something, of course, you need a customer. So we talked about vendors. Now we're going to talk about customers. A customer is a person or a business who pays you money. So it's the vice versa of the vendor, right? So in other words, it's a person or business that you sell something to. So for example, you know, if you run a bakery, then someone who walks into your bakery and buys, you know, a cookie is a customer of yours, right? Or, you know, if you run a landscaping company for commercial businesses, then they could be your customer. So those are examples of customers, right? So people who just buy what you're selling, essentially. So just like a vendor is always connected to an expenditure, okay, sales are always mapped to customers. So the bookkeeping system requires that you have a customer before you can record the sale, okay? So, and going into strategy, this is important so that we can start tracking who's paying you money. You may want to know things like who's your most valuable customer, right? Is there a certain demographic that's buying from you more frequently? Well, you may want to know that for marketing purposes. You may want to know who hasn't bought from you in a while. Is there someone that you haven't seen in a while, or whatnot? So these are powerful pieces of information that you want to start getting out of your bookkeeping system. And again, next week, we'll go a little bit more into that, and I'll show you some really interesting reports that you can pull that can really hone in on this type of information. All right. So for this reason, you need to set up customers in your bookkeeping system before you can record the sales. So let me show you how to do that. So to create a new customer, what we're going to do now is click on the sales. We're going to go into the sales center. So again, on your left-hand menu, we're going to find the sales button there, and that's going to bring us into our sales center. Once you're in there, you want to click on the customer tab, and that's going to bring up a list of our customers. And then we're going to click on the new customer button to create a new customer. Now, this is what a customer, setting up a customer looks like. This is the screen. Again, notice the vast amount of information you can enter. In fact, if you notice, there is a lot more information you can enter about a customer than you can about a vendor. That's done purposely because you want to track. It's important to track your vendors. It's even more important to track your customers. So there's a lot of great information that you can track around your customers here. Obviously, I can't go into all of this, but please take a look, poke around when you have a moment and see just how powerful QuickBooks is at capturing this information here. For our purposes, the one and only thing that we want to do to set up a customer and to set one up really, really fast is just type in their name. So if it's a company that you're doing business with, just type their name in the company tab. Or if it's a person, you can type their name right there in that very first line, first name, last name. Okay. And that's it. Save it. And now you've created a customer. So again, it's just that simple to be able to create a customer in QuickBooks. All right. So now that we have customers, we can start entering our sales. So just like the bills versus expenses, we have the same dynamic going on in sales. You can have an invoice or you can have a receipt. So again, an invoice is something that you're doing for a customer. You're going to do it now and then require that they pay later. So if you're an attorney, you're doing work today, and then you're going to send them an invoice and they're going to pay you 30 days from now. Okay. If it's a receipt, you're demanding payment for them on the spot. So if you run the coffee shop and someone's coming in to buy a cup of coffee for you, you're probably not going to send them an invoice and demand that they pay you 30 days later. You're going to ask for their credit card right on the spot. So what happens? You charge the credit card, you give them a receipt. That's why it's called a receipt. These are actually accounting terms. Okay. So that's where all of this comes from. So that's what a receipt is versus an invoice. So again, philosophically, two different ways that we're going to enter this into the system. So we're going to start with the invoice, and then the receipt's going to be a very, very similar process, just much simpler. All right, so let's talk about how to create an invoice first. So we're going to click, again, that plus new button. I told you it's going to be your best friend. So we're going to click the plus new button, and this time we're going to select invoice, that very first option there on the left-hand side of the screen. So this is what an invoice screen looks like in QuickBooks. So let's take a second and check out what we can do in here. First thing you're going to do is select the customer. So you're going to select the drop down and list of all your customers are going to show up. If you don't have the customer in there yet, you're going to want to create the customer, then jump back in here and then be able to select that customer. But again, they have to be in the system so they know to marry the invoice with the customer. It ties it together there. All right. Once you select the customer, some general information is going to pop up. It will actually pull the previous transaction from the customer and pre-fill some of the screen for you, which is very helpful. It's a time-saving feature in QuickBooks because people tend to kind of buy the same things from you over and over again. So it kind of pre-fills a lot of this, which is really great. Okay, next, just like with a bill, we want to input what is the date I'm invoicing my customer, and more importantly, what is the date that this is due? When am I going to demand payment from my customer? You definitely want to make sure you put this in there so that QuickBooks will remind you when your customer is past due. Be really diligent about this. Again, I can't tell you how many times we start working on, a file and there's just a bunch of past due invoices in there. And, you're running your business and hey, you forget to collect this money, but you did this work and you need to make sure you collect it. QuickBooks will remind you, but you got to put in the information so it'll remind you. So make sure that you get that due date put in there. All right. So put the due date in there. And then next, you're going to then select what you did for the customer. So you're going to select your drop-down list, and there's going to be a bunch of things that you sell either as a service or a product that you provided to the customer. So you're going to select the proper item from the list here. Now, I'm going to tell you real quick, the way that QuickBooks does this section is they use a concept called items. Items is slightly different than a chart of accounts. But again, QuickBooks does set up some for you by default. So if you're curious to learn more about items, I don't have time to get into it today, but if you're curious to learn more about it, feel free, or if we have time at the end, I can get a little bit more into that and we can chat about items. But it's a very similar concept and it ties right to the chart of accounts there. So what you're going to do is you're going to select the item that you sold to the customer. You're then going to put in a description of the thing that you sold to them. And you're going to put in the rate. So if it's an hourly rate or it's a rate per item or whatever, you're going to put that in there. The quantity that you sold. So if it's hours, you can put the hours that you worked, or if it's, physical inventory, the inventory that you sold and the amount. And then what it's going to do is it's going to calculate, take the quantity times the rate and give you the amount, of course, that you then need to charge them for that. If there's sales tax that you need to assess on the thing that you sold, there's a box there where you can indicate that. Sales tax, again, whole other conversation, but I just want you to know that QuickBooks does an excellent job at tracking your sales tax for you. So if you have to charge sales tax on the things that you sell, it's definitely worth checking out how QuickBooks does that. It can be a real help to you. So again, happy to have an offline conversation about that. All right, again, you can input multiple things. You can actually have a line by line invoice that you generate here of what you're selling so that your customer can clearly see what exactly you're providing to them. All right, down at the bottom here, it's going to give you the totals, right? Here's a subtotal. If you have sales tax, it's going to calculate the sales tax, the total amount due, et cetera, then of the invoice. And then that's it. You just click save and it will save the invoice. And then you can either, download a copy of that and send it to your customer via email, or you can actually email it directly out of QuickBooks, which is a really cool thing that it does. All right. So now that you've sent the invoice to the customer, of course, you have to receive payment on the invoice, which is arguably the more important part of the sales process and fulfillment process. Hey, you did all the hard work. I want to make sure that you get paid. All right. So you definitely want to make sure that your customer pays the invoice. Just like in the bill payment, they're going to pay you in real life. They're going to hopefully send you a check or pay you by credit card or whatever they're going to do. You then have to tell QuickBooks that your customer has paid you. QuickBooks does not know, obviously, that they've paid you in real life. So you got to tell it. Again, an area where we're starting to clean up books, we see a lot of issues is here, where there's a lot of receivables that are showing on your financial statements, but you don't really, your customers don't really owe you that money. They have paid it. And so again, it throws everything off. It throws all your financials off. So you want to make sure that you're being diligent about this step and make sure that you are recording the payments when your customer is paying you. All right. So what we're going to do here is, again, click the plus new button. And then this time we're going to select receive payment. This is what the receive payment screen looks like. What we're going to do is we're going to select the customer that we're getting payment from. And then once you do that, a list of all their outstanding invoices is going to show up here on the bottom of the screen. So here's everything that they currently owe to you. You're then going to select what invoice or invoices they're paying you against. Okay, so they're paying you against this invoice. And then you're going to input the amount that they're paying you. Hopefully it's the full amount of the invoice. And if it's not, it's a partial payment, something like that, you can indicate that there. Okay. Then at the top of the screen, you're just going to look and see, okay, this is, yes, this matches the amount of money I actually got from my customer. We're going to put the date that they paid you. Now, this is important. I'm going to pause right here. It's very important to put the payment date that they pay you, because one thing, I'm going to put on my strategy hat here for a second. One thing that you're going to want to track if you do invoicing in your business is you want to start to understand how long it takes for your customers to pay you. I want to know what my receivables turnover is. That's what we call receivables turnover, because that's going to help me start to better predict my cash flow. If I want to know how much cash I'm going to have 30 days, 60 days, 90 days from now, I need to understand who I invoice today and when I can expect that payment. QuickBooks will help us figure that out if we put in this type of data in there. It will start to tell us, hey, your customers typically pay you in 45 days. That's really good to know, because if I send an invoice today, I know I can expect that cash in my bank account within 45 days. Very, very powerful information to know. So you want to make sure that you put this information in there. All right. And then you're just going to save and close. And then that's how QuickBooks then closes out that invoice and says, great, this customer paid you. They're done. We're good here. We've gotten paid on this. All right. So now that you understand how to enter an invoice, now let me show you real quick how to enter a receipt. Super, super easy, because you know how to enter an invoice. This time we're going to go to the plus new and click invoice. Sales receipt. And then the sales receipt screen shows up, looks pretty much exactly like the invoice screen. The only difference is now it's asking you where you're going to deposit the money to, basically. Okay. And we're going to deposit into our bank account, and that's it. And then just click save. And then that's how QuickBooks knows that you've just sold something and it's giving you that money. They're giving you that money right away because it's a sales receipt. All right, so that's how you enter information, how you sell stuff basically in QuickBooks. So let me pause and see if there's any questions there.
Hey, Manny. Great job so
I
far.
get some water.
Yeah, we have about 7 questions. You want to tackle those now?
Okay, yeah, let's go for it.
All right, cool. So the first question is, when you receive PPP loans, grants, etc., how do you categorize that?
That is a great question. So I would use the receipt. So I would use the sales receipt. I would again put in the customer is going to be the government, the SBA, basically. And what I would do is now you would have to create a special item called PPP loan probably, and tie that to what we call a liability account in your chart of accounts. That's how I would record the PPP loan. So that's a little complicated. I'll tell you what, at the end here, if we have time, I'll demo that live. I'll show you how to do that.
Cool. The next question is, are the expenses added automatically if you have all of your accounts under banking?
Good question. I'm not going to get into the banking. That's the banking center. So the quick answer is no, they're not automatically entered. You still have to do something in there. But I'm glad that, yes, you can connect your accounts to QuickBooks through the banking center. What it does is it pulls information into QuickBooks, but it does not record it. What it does is it says, well, and when I get into the next section, reconciliation, that's essentially what it's doing, is it's saying, hey, I see these transactions going through your bank. I'm not sure if these are in QuickBooks. Should they be in QuickBooks? And then you need to either say yes or no. That's really what it's doing there. So that's a different feature that, again, if we have time at the end, I can do a little demo of.
Cool. Next question. Can you use the customer base as a donor database?
Yes. In fact, I highly encourage that. Absolutely 100%. We do that a lot. Yes. It's not the best at that. I mean, I would still recommend using a third-party application that actually is a donor management system, depending on how many you have and whatnot. But yeah, I mean, if you don't, QuickBooks certainly can do it though. Absolutely.
And next question, can you create a customer for individuals that pay rent to you?
Yes, absolutely. Yep. Exactly. That's exactly what I would do with it.
In entering customers, can you use QuickBooks like a CRM?
Yes. So QuickBooks, that's one of the really cool things, is that you can see a lot of the information that it captures for your customers if we go way back here. But that's really powerful information that a CRM system would capture a lot of. So yes, 100%.
Does the nonprofit version of QuickBooks look the same?
So there is no more so they got rid of that. So the desktop version, once upon a time, they sort of did these different industry type things. It didn't really go over well, so they kind of ditched that. So that's the desktop version. The online version, there's just QuickBooks Online. Now there's 3 different levels of QuickBooks Online, but it goes more into the fields that you have access to and the sophistication of the program, but it's not industry specific anymore.
Can you track progress of an invoice, like how many times you've sent it to them in the mail? I know it can track if you email them, but not sure about the mail.
Yeah, good question. No, it will track it. Yes, if you email it through the QuickBooks server, it'll even track when they open the invoice, which is very cool. I mean, you can know if someone, not only did they receive the invoice, but did they open it and look at it, which is very good information. But yeah, that's only if you send it through the server. No, otherwise it won't track it. I mean, you can put a note in there. There's a note field, if you notice, in the invoice, you can put your own notes in there. But yeah, that's how you would do that, I would say.
And last question so far, can you download bank transactions into QuickBooks? If so, does it match against transactions entered into QuickBooks already?
Yeah, so that's similar to the other question. So yes, you can connect your accounts. No, it doesn't do it automatically. You still have some action you have to take there. So I can, if we have time, I can show a little bit of that at the end.
And that was the final question. Thank you.
Cool. All right, well, let's get into this final section here, and then we'll just do some more Q&A and maybe some demo if people want to stick around. All right, so let's get into reconciliations. And I lost my place on my, notes here. Okay, here we go. So reconciliations. So this is the final area we're going to talk about today. Why now? I throw this in here because this is a very, very important thing that everyone really needs to do in their books, but no one does it other than accountants. So I really take the time to explain this to you, the business owner, and plead that you please do this. So now that you've entered all of these transactions into QuickBooks, it's time to reconcile your account. So reconciling is all about ensuring that you have accurate bookkeeping records. So really, its purpose is to do two things. One, are you missing any transactions in your bookkeeping records? And two, have you duplicated or made any errors in the transactions that you have recorded? This is very important because if you're missing something, or if you've duplicated something, or if you've made an error, then your records will be wrong. And then what's the point of doing bookkeeping? Like, I do bookkeeping so I can pull accurate reports, so I know exactly what's going on in my business. But if I don't know that my records are 100% accurate, I'm not going to trust the information that I find. So it's incredibly important that you do this. The reconciliation will catch errors. That's essentially what it's for. So the importance of this is to make sure that you're catching things so you know beyond a shadow of a doubt that you have 100% accurate information in your accounting records. Okay, very, very important. Okay, so how does it do this? How does reconciling work? Okay, it's actually pretty simple. So what it does is it takes your bank or credit card statement, either one, and it matches it to your bookkeeping records. And by doing that, you can then see if there are any discrepancies between the two. Okay, so to be able to do a reconciliation, what you want to do is click on the accounting menu. I know this is scary, but you want to click on the accounting menu, and you're going to get into some accounting stuff here. But you're going to do accounting and then click on reconciling here. And then this is what the reconcile and account screen is going to show up here. Okay. In the account box, what you're going to do is choose the account you want to reconcile. Now, you want to reconcile all of your bank accounts and all of your credit card accounts on a regular basis. At least once a month, you want to do this. If not weekly, to be honest. I reconcile my accounts actually weekly, but of course I'm an accountant, right? I would do that. But it actually is really helpful. At the very least, once a month, you want to reconcile this to make sure that you have accurate information in here. All right. So we're going to select what account we're going to reconcile. Now, here's a mock bank statement that I made up. So no one is harmed in the making of this presentation. But here's an example bank statement that I typed up. Okay. What you then want to do is type in the ending date of the bank statement, okay, into QuickBooks. So there's that. And then you want to put the ending balance of the statement into here as well. All right. Once you enter that information, click the Start Reconciling button, and then we're off to the races. And let's see how we do this here. All right, so this is now the reconciling screen. Now there's a lot of information, a lot of numbers on this screen, a lot of stuff. Don't be intimidated by this. It's actually very, very simple. I'm going to show you exactly what you need to look at here, and then you can really just ignore the rest of what's on the screen here, okay? The whole objective of the reconciliation is to get that number there, see difference? You want to get that difference to be 0. That means that there's 0 difference between your bank or credit card statement and QuickBooks. That's the point. 0 difference between the two. So your job is to drive that number down to 0. How are we going to do that? So in order to do that, we're going to focus on the transactions that appear here. This is a list of all the transactions that you have entered into QuickBooks, okay? So you've entered all of this stuff into QuickBooks, and then here it shows up here. What we're going to do is match line by line each of these transactions as it appears in our bank statement, okay? So in other words, every time a transaction appears on our bank statement, such as this one here, Tanya's Nursery, we're then going to find it in QuickBooks here, okay? These are the same transaction. And then we're just going to click that little, so if you saw that little animation, we're just going to click this little button here that says, yes, I see this transaction hit my bank account, okay? And what we're going to do is we're just going to do that literally down the line. You're just going to, yep, this one hit. Yep, this one hit. Yep, this one hit. And you're just going to go all the way down there. It's actually a lot of fun when you start to do it. I mean, there's something sort of satisfactory about just checking boxes there. Okay. But that's all we're going to do is we're just going to go down the line and check all these boxes. And then we're going to see exactly everything that passed through our bank account. And that's it. That's all you have to do there. Okay. Now, where it becomes tricky is we start seeing some weird things. So in this example, let's say that we had a check that passed our bank account on October 5th. But in QuickBooks, we noticed we entered this transaction August 11th. So there's a bit of a time lag there. Okay, this is why it's important to reconcile your account, because oftentimes we'll have things like outstanding checks. You wrote a check, you put it in the mail, they haven't cashed it yet. Okay, you want to make sure that you're tracking this so that ultimately you know they are going to cash your check and that you can have accurate cash balances in QuickBooks. So that's a common thing that happens. There's no problem there. You just want to make sure that they are cashing that. In this case, they are, which is really great. Now, notice this very last transaction that appears on our bank statement for $24.36. Okay, we actually don't see this in QuickBooks. This is an example of a missing transaction. So what happened is something passed through our bank account, but we forgot to record it in QuickBooks. So again, this is why we do a reconciliation so that we can catch these things. So what we want to do now is then record the transaction in QuickBooks. And now once we record it, now it shows up on the reconciliation and now we can match it and say, yes, now we have complete records. Okay, so again, that's one of the things that we want to catch in QuickBooks. Now, what happens if you have a transaction in QuickBooks here, such as this one here, but it doesn't show up on your bank statement? Okay, well, this is where a couple of things could have happened. This could be a duplicate transaction because maybe you recorded it twice, and that's why it didn't show up on your bank account, because it really didn't happen. Okay, you recorded something twice but didn't realize it. Or maybe you made an error in recording it. Maybe it's the wrong amount. So this is where we're going to then catch duplicate transactions or erroneous transactions. If it's a duplicate transaction, we can then delete it. And then what that does is it then gives us a more accurate cash balance in QuickBooks and a more accurate recording of our expenses or our revenue on our financial statements. So again, these are the things that we want to catch so that we can get rid of them. I say get rid of the junk in your file so that you have accurate records in your system. All right. Once you do all that, okay, now what we want, again, is we want to see that difference to be 0. Once we're done reconciling, that difference should be 0. And then that's it. We just click the Finish Now button and we've reconciled our accounts. And now you have accurate bookkeeping records. So when you look at financial statements, which we're going to look at next week, now you know that they are 100% accurate and you can trust the information in your system. And that's really, really powerful. All right, so I'm going to do some quick wrap up and then we'll open it up for questions. So that concludes the QuickBooks Crash Course and the top 3 things that you need to understand about QuickBooks. So hopefully that was helpful to you. Again, there's a lot more things that QuickBooks can do. I'll try to demo some of them if we have some time here at the end. So there's a lot of things that obviously QuickBooks can do. Couldn't cover it all here. So just take a look here. If there's anything of interest to you, let me know. Like I said, I do have a whole e-course series where I dive into specific areas of QuickBooks, like setting up banking automations and things like that. So sales tax kind of stuff like that. So if you're interested in learning about that, and it's really just about understanding how to manage your money as a business owner, then feel free to hit me up or go on our website and learn more about that. We also have a support system, a bookkeeping support system, where if you do your own bookkeeping, you can't really afford to outsource it, but you're looking for some professional guidance and hand-holding. What I do is I pair you up with one of my team members, and we help you learn how to do your own books and help keep it up and do some quality control reviews for you and stuff like that to make sure that you're doing your bookkeeping correctly. So it's a really great option if you're a small business. you're maybe a new business starting to grow, don't have a lot of money to spend on accounting, but still are looking for some professional guidance. That's what our support system is for. So if you're interested in that, feel free to shoot us an email and let me know about that. And of course, if you need anything else, there's my information there. So with that, I will open it up for more questions.
Of which we have many.
Oh, okay, great.
So here we go. Actually, maybe 4 to 5 questions, not too bad. So without getting into too much details of items, can you use this feature to track inventory?
Yeah, so that's exactly what items is for. So items originally was just for inventory, and then it sort of became how we record revenue in QuickBooks. But yeah, so it can do things like it can track quantities of things. So it can help track your quantities. It can track SKUs. It can track the cost of goods sold, obviously, which is the big thing there, is what I bought it for, so that when I sell it, then I can get a cost of goods sold report and a profit margin report, which is extreme. So next week, I know that's in my demo is that report. But I mean, if you sell inventory, you definitely need to be paying attention to that. So that'll help you with pricing and whatnot.
Cool. Next question. Can you show and track retainage, generally 10% of the payment, for example, through the invoice? And can you then bring back all retainage that was held from each payment?
So if someone's paying you like a deposit, so what you would do is you would record the invoice. And then what you would do is do a receipt payment against that invoice, but you would only do in the amount section, you would only do the amount that they paid you. So let me go back here. That's what I would do. So here in the receipt payment, what you would do is then under the, wait, here we go. Where did I go here? Here in this box here. In that box, that's where you would then put in the amount that they paid you as a deposit. So that's what I would do.
And can you use QuickBooks for personal and business?
I actually do use, because I'm an accounting nerd, I actually use QuickBooks to manage my personal finances. Yes, I do. Now, QuickBooks is made by Intuit. Intuit is a big software company. So Intuit makes QuickBooks, it makes TurboTax, it makes Quicken, and it also makes Mint. So if you're familiar with those programs, that actually is Intuit. So Intuit makes Mint, which is the personal finance product they have. However, I do not like Mint. I don't think it's very good. As an accountant, it actually drives me nuts. So I personally do my own accounting in QuickBooks, but that's a whole other story. So happy to chat with you offline about that. Same principles apply. You have your customers, which is your employer usually, right? Or, whoever, your business. And then your vendors, which is your mortgage and all that fun stuff. So.
Mm-hmm. Is it okay if my bookkeeper reconciles once a quarter?
I don't recommend it. If you're paying a bookkeeper, I mean, they should be reconciling. I'll put it this way. I mandate that we reconcile our clients' accounts weekly. That's what we do. Because as a small business, you need to keep a really tight grip on your cash. You need to know exactly what you're spending at a moment's notice. And you need to know what your cash balances are at a moment's notice. So for us, we reconcile weekly for our clients. That being said, if you're doing your own books, I recommend, if you can do it weekly, do it weekly. And remember that if you do it weekly, it's a really fast process. It takes me probably 5 minutes to do this once a week. If you wait a month, it's going to take you a lot longer, because you also have to go back in time and think about, if you find an error, well, what was that transaction? What happened here and what happened there, right? So the more up to date you can do it, the better. Okay. Now, if you have a bookkeeper, personally, I think they should be doing it at least once a month, at least. That's what I think. If they do it once a quarter, I don't think it's really helping you as a business. I mean, are you really getting the information? Remember, we don't do bookkeeping just to file a tax return at the end of the year. That's not the point of bookkeeping. Yes, that is one of the things that bookkeeping allows us to do, but it's really about understanding how money's flowing in and out of your business. So how are you doing that if you don't know you have accurate information? That's what I would submit to you.
What do we record the missing transaction as a receipt?
Sorry, what was that?
What do we? Yeah, I'm not sure about what do we record the missing transaction as a receipt?
Yeah, I'm not sure, but if you do
Okay.
find a missing transaction, you want to either record it as, bill, expense. Well, it'd be an expense or a receipt, really, probably what it is. So.
In terms of reconciliation, can you stop and save it halfway through and then come back and finish the reconciliation later?
Yeah, you can. Yes, no, for sure. Yeah, you can definitely save it, come back to it later. I will tell you, pro tip, if for some reason it's not working out, you're having trouble with the reconciliation, you can also, going back to that, should I reconcile quarterly or monthly or whatever? Again, if you do it weekly, the odds of you running into trouble are a lot less. If you're trying to do a whole month at a time, you may run into problems. So if you do run into problems, try doing it in shorter increments of time. Sometimes that helps. Like reconcile just 3 days at once or something. Sometimes that's helpful.
What about outstanding checks and reconciliation? How do you handle that?
Well, make sure that it's a legit transaction, that it's not an erroneous or duplicate transaction, right? That's why we want to check for these things. If it really is outstanding and you know that they haven't deposited the check, I mean, reach out to them, of course, if it's been a while. But you want to make sure that when you look at, and this is why you want to keep accurate cash balances in your QuickBooks. Don't look at your bank account balance because that may not be the true balance that you have. You have to subtract your outstanding stuff, right? So that's why you want to look at QuickBooks to see what your true cash balance is. All right, that's one of the importance of this.
Mm-hmm. Is there a way to charge a fee if they make payments online, since QuickBooks charges a fee?
Yeah, no, good question. You cannot add that automatically to the transaction, unfortunately. So what we'll do is we'll tack it onto the invoice. I would say typically, because QuickBooks charges about like 2.75% or whatever they charge there. We'll typically just tack on like a 5% service fee. That kind of usually gets it to net out properly. So if you tack a 5% service charge fee, that'll work.
Here's a software personal question for you. Do you prefer QuickBooks over Quicken?
Oh yeah, well I don't know anyone who actually uses Quicken anymore. Quicken was a very simple program. Mint sort of took over Quicken. I think that was sort of the idea. But yeah, QuickBooks is really where you want to be at.
The next question is, I just took over our finance department. Congratulations. And the previous person did not do any reconciliation in months. Do I need to go back and reconcile all those transactions, or can I start fresh?
Yeah, call me. You need to call me.
I think that's actually the best answer.
Yeah, that honestly, I mean, yeah, you may just want, but yes, I mean, honestly, yeah, you have to go back and reconcile everything. Yeah.
Yeah.
Yeah, that would be the best course of action.
And call you.
Yeah, and then make calls.
When
a lot of cleanup.
Yeah, that's a lot. Yep. When an invoice is unpaid, we charge late fees and interest if it is not paid by a certain date. We issue a new invoice that includes the interest and late fees. How should we handle the previous unpaid invoice?
I would actually just tack it, go into the invoice and just add new lines to it and then just resend it to them. So it's the same invoice, you're just adding more charges to it now over time. So it starts to become a longer invoice, I guess, depending on how long they go, but yeah.
Mm-hmm. And the final question, if you combine personal transactions, can you separate the data out so that it's not mixed with your business transactions? Ooh, here we go. This one's a home run for you, Manny.
Yeah. So one, if you're doing this, Well, so no, you should not mix your personal transactions in with your business transactions. That's like business rule number one. However, let's get real. Sometimes, you have, let's say, a credit card under your name, but you're using it for the business, and maybe you're using it for both. Of course, you really shouldn't be doing that, but should and you are two different things. So if you are doing that, what you want to do is just make sure that in your business books, if you use a card or a bank account for a personal transaction, you actually code that to an account called withdrawals, equity withdrawal. Okay, that's where you want to put that, because it's not an expense of your business. Don't code it as an expense of your business. Code it to withdrawals. Okay, that's where you want to put that there. And then hopefully start to stop doing that over time.
Yep. And that was the final question, Manny. Thank you.
Cool. Awesome. All right. Well, I guess that's good. Was there anything I was going to do? I said I was going to do something, but I forgot what that was now.
Let's see. Let me go back a little bit here.
Let me stop this here.
Let's see. You talked about the retainage tracking for a project.
Yeah. Just out of curiosity, the person that asked that question, are you an attorney? Is that what you're asking about by any chance?
Oh, that was it. This is the reminder, the categorization for grants and PPP.
Ah, that's right. That's what I was going to do. Okay, so let me jump into, if you all want to stick around, I will show you how to do that. So I'm jumping into the demo file here. Okay, so this is the demo file. So yeah, no, I'm not a robot. Okay. All right, let's see here. I do not like to do live demos of QuickBooks because sometimes you just never know what's going to happen in here. So it is software, and software is not 100% perfect, let me tell you. So it also runs very slow sometimes. So this is QuickBooks. So first thing I'm going to do is set up an account to capture the chart of accounts. Okay, so again, this is the demo file. So if you went to that URL, this is exactly what this is here. So I'm going to go to my chart of accounts. Okay, and by the way, this is the dashboard that pops up when you first log into QuickBooks, and it has some pretty interesting information. You can actually sort of customize that dashboard if you want to see certain things right off the bat. But anyway, so this is the chart of accounts. All right, that it sets up. And again, this is a list of all the ways that you make money, spend money, things that you have, things that you owe. So all the financial stuff that goes on in your books here, in your business, is captured by an account. Okay, and this is the essence of accounting. It's the accounts here. So what we're going to do for the PPP is we're going to create a new account in our chart of accounts. And under account type, we're going to select a long-term liability. So you could be a current liability or long-term liability. It doesn't really matter, but you just want to make sure it has the word liability in there. That's the point. Okay, it's a liability because technically the PPP money is a loan that gets forgiven. So it's a loan first, and then it gets forgiven later. So we're going to record it as a loan for now. Okay. Now, when it gets forgiven, you can get rid of it, but we're going to call it a loan. Detail is going to be a note because that's accounting speak for loan is note. Okay. And then what we're going to call it the PPP loan, let's say, and that's it. We'll just save and close that. And then what that does is that creates the PPP loan account. So you'll see that there it is right there, PPP loan under liabilities. Okay. Now so now that we did that, let me show you how to create an item. Okay. Because then we're going to tie this to an item. So let me go into my sales center. So those of you who are curious about items, here we go with items. So I'm going to go into the sales center and I'm going to click on products and services. which it used to be called, they used to call it items, and then they changed it to products and services for whatever reason. I don't know why. All right, so we're gonna click on that. And so this is a list of your items here. So by the way, the person who asked the inventory question, see, you can see right here, it actually tells you I'm low on stock, I'm out of stock. So this definitely helps you manage inventory. And there's a lot of really great information in here. So what I'm gonna do is I'm gonna create a new item here. Now, everything you sell out of QuickBooks has to be tied to one of these items. So it's either inventory or it's service, really. Okay, so service is obviously it's a service, inventory is inventory. Okay. So if it's a non-inventory, basically, I'd rather say we're going to call it a service. So I can call this PPP loan as well. And then what I'm going to do is obviously there's no SKU, no category, none of that. Under income account, and this is a little weird, but I'm going to, in income account, I'm actually going to tie it to that PPP loan liability account that I created in the step before. Okay. So that's step 2. Obviously not a taxable thing. So I'm going to say it's not taxable and save and close that. Okay. So step 1 was we created the account. Step 2 is we created the item. Now we can create the receipt. So now I'm going to go into my sales receipt, as I showed you before. And then over here, now what we're going to do is as soon as this thing opens up, okay, under customer, I can say, you know, small business administration as my, you know, as my customer, because they're the one who's giving me money here. All right. And then the date I received the payments, whatever date, you know, that was. All right. And then where am I going to deposit to? I'm going to deposit to my checking account. And then what did they give me? Again, this is that item I created, PPP loan. And then, you know, however much the loan was. And there it is, $20,000. And then now I save this. And that's how you create, how you deposit the PPP loan into your account. That's how you record it. So what that does now is, let me save and close this. So now if I go back to my chart of accounts, you're now going to notice that, there we go. You're now going to notice that I have a lot more money in my checking account now. Okay, because before it was just $1,000. Now I have $21,000. And if I go down to PPP loan, there it is, $20,000 loan. Okay, so that's how we start tracking our loan.
And there's another quick question. What if it's a grant? The PPP would be a loan, a liability. What would you categorize it as a grant? That's the question.
So if it's a grant, so instead of calling this a liability, then instead what I would do is I would hit this drop down and call it income instead, because that's really what it is. A grant is basically income to you. Or if you want, you can call it other income if you want to kind of separate it out from the things that you normally sell. So I would call it maybe other income, but that's what it is. That's actually what it becomes to you. Mm-hmm. If you remember, there's a lot of talk around the PPP if it was going to be taxable or not, and that's a whole other discussion. But because it's actually technically income to you,
right?
Yeah. So that's what you would do, is just call it income instead of loan.
Yep. The person says thank you, and we say you're welcome.
Yeah.
And I think the answer to your question, if it was an attorney, I think it was the answer to that question was construction for the personal
okay.
equity. Yeah.
Okay. Yeah.
So I don't see any other questions popping up. So I think, yeah, I don't see anything else.
Cool.
So before everyone leaves, we are going to do a quick questionnaire to ask for your input to the webinar. So please don't jump off right just yet. We have a few more minutes left for some homework on your part. So if I can just share my screen real quick. So as I spoke about earlier, the webinar is, you know, it's one webinar that builds upon the other. So obviously the next webinar is we're going to have Manny again. So we're going to be going into part 2 of the QuickBooks training, as Manny mentioned. And we're going to get a little bit deeper. We're going to talk about the reports, right, Manny?
Yep.
Yep, we're going to get into the reports. So today you learn about data entry, reconciliation, and how to categorize your entries. Now we're going to start looking at how to use QuickBooks for the reporting of your business, which is like the soup and nuts really of your business. It's the monthly reporting. It's the KPIs of your company, and you know where it's going, and tracking data points, and then looking at trends. So that's something that we're going to get into next week. So with that, I'm going to turn over to Pauline. But like I said, please don't leave. We have a quick questionnaire for you. It should take about 2 minutes for you to answer that. And I think Pauline just launched it. So Pauline, over to you. Thank you.
Okay, fantastic. Okay, thank you for joining us today. Please take a moment and answer the exit poll questions. Another informative webinar by 1917. And thank you, Manny. Thank you, William. And really to understand and have somebody who knows QuickBooks the way you do, to have these personal business questions answered is absolutely phenomenal. So thank you for your knowledge and insight, and well done, William, also. And again, thank you for answering the polling questions, and hopefully we'll see you next week.
Awesome.
This concludes our event.